Hello, hello, and welcome to another installment of The Former Banker. I'm Austin. I'm your former banker, your financial uncle, if you will, giving you the advice and guidance you need to navigate the waters of today's financial environment and working to give you the education that you always should have had when it comes to finances, credit, loans, investing, everything in between. As you guys probably already know, I spent 10 years in the banking industry working in 4 of the largest banks here in America. Spend a lot of time talking to thousands of people, giving them advice and guidance. And now I want to do that not just for the people that I worked with, but for people around the country and around the world. So what are we going to be talking about today? Well, I want to ask you a question, and I want an honest answer. Deal? Sound good? Okay, here we go. How's your credit score? Ooh, need a little improvement? Well, unless your score is 850, in which it is, congratulations. Perhaps you should be here teaching this stuff. I'm guessing that, may need a little work. That's okay. May not need a little work, but if you don't want to purchase a car or some real estate or rent any place like that anytime soon, no big deal. For everybody else, today, what I want to do on this episode of The Former Banker, and you'll pardon me for looking down here, I'm just going over some notes. I want to make sure I get everything right for you guys. We're going to talk about some of the best ways to build your credit. It's one of the conversations I had numerous times as I'm just getting started. I'm just trying to get things, my feet underneath me. I'm getting to be an adult. I want to build some credit. What do I do? Well, the good news is whether you're 20 or 120, and if you're that old, good for you, it's okay. Most of the people find themselves in this boat. That's why I'm making this channel, is to reach out to everybody who's got all these questions, but no advice. So, what is the first easiest way to start building your credit? Well, answer simple. If you can qualify for it, honestly, it's to get a new credit card. Why do I say that? Well, if you're using a service like Credit Karma or Experian or any of the other credit reporting agencies out there, you guys know that from time to time they will actually give you offers and show you what cards that you are selected for or what you've got good odds of being approved for. That's great. If you are in the position where you can afford to take on a new card, you're comfortable enough to take on a new card, jump on this. Why? A couple different reasons. A new card, while it may hurt your score in the first month, and that's only because of the inquiry, starting in month 2, the new card's going to report as open and available credit. Now, don't go haywire with it. Don't go out, charge it up, this and that. Use it to your advantage. That open available credit signals the credit companies, the 3 credit agencies, that you know what? There's an institution out there that's deemed this individual responsible enough to have this, that they're going to pay it back, and they have the income to qualify for it. That's going to help elevate your credit, boost it up. It's going to show that you're a responsible individual who's got a good track record and who's got sufficient income. Now, do you have to use it? Absolutely not. You could open it, let it sit. That's what I've done a couple times. I've got 2 or 3 cards that I've opened up. I have never used them. I will never use them, but they are showing there as open and available credit that I can afford. Now, there can be a time where you can get too much open and available credit. We will talk about that in another video, but if all of a sudden you don't really have that many cards, let's say you have 1, maybe 2, open up a 3rd. It's not going to hurt. All right. Next up, and this is my personal favorite, this is just what I'm saying here, take out a loan. That may sound really stupid, but if the only thing that you have reporting on your credit is a credit card, then you have what is in the financial world known as a thin credit file. What's that mean? A thin credit file is just what it sounds like. It's a thin file. You've only got one type of credit that's in there. Credit agencies look at all types: mortgage, car loan, credit cards, personal loans, lines of credit, all those kinds of things, and that's what builds out your own personal credit file. Think of it kind of like your permanent record when you were in school, but for your finances. Now, when I say this, this is how I started building my credit. Caveat here, little disclaimer, do not go out and borrow some ridiculous amount of money. If I were doing this all over again, I would do just what I did. I went and I took a loan out for $1,500. When the bank gave me, this is what I did, I took a loan out for $1,500. Let's just call this the bank. The bank gives little Austin, little old me here, $1,500. And what I did was I took that $1,500 and I immediately put it in a savings account, a safe, right? Let's just say that this is what this is. It's a safe. It's a terribly drawn safe. It doesn't matter. What did I do then? Well, every month the bank would send me my bill for my loan. I don't know, I think it was like $65. And I would then reach into my little safe, my savings account that had my $1,500, and I would pay back my loan. So I used the money that I borrowed from the bank to pay back the bank. Now what happened was, I think I financed it for like 24 months. In month 22 or 21, the money that they lent me ran out. So I had like 3 months where I actually had to pay my own money and some interest. All right, no big deal, because what happened is the bank actually paid me almost the entire way to build my credit. It's a tremendous thing to do. I got that advice from a very, very smart banker. It's exactly what I did. And when I came out, before I screwed up my credit, when I came out, my credit was hovering like around 780. So go get yourself a very small, manageable loan. Take that money that the bank gives you, immediately put it in an account somewhere else that you're not going to spend, and then use the money that they've lent you to pay the loan every month. And like I said, you'll have like maybe 3 to 6 months where you'll actually have to carry your own payment. But this is going to be the bank's way of giving you the ability to build your credit. All right. Do not go and spend this money that you have borrowed. That is like one of the worst things that you could do. A little other thing that you could do here, finance a smaller purchase. You guys know, anytime you go into Best Buy, what do they ask you? Do you have a credit card? Honestly, from time to time, probably not a bad idea. If you're, financing something that's going to cost you $1,200, say you bought a new Mac or you bought a Surface Pro, they're going to give you 12 months of 0% interest. That's great. Take advantage of it. Pay $100 a month for that 12 months. That's going to report back to your credit. Now, cautionary tale here, cautionary piece of advice. If in the event you go to a company like a Best Buy and you agree to take the 12 months at 0%, make sure you get that thing paid off in full by the time that 12 months runs out. Why? What's going to happen is over the course of that 12 months, your purchase is going to accrue interest. Could be $100, could be a couple $100. If you do not have that thing paid off in full by the time that 0% period runs out, they will charge you with all of that backdated interest. All of a sudden, wham, you're going to get this bill for like $400 and you're going to say, whoa, wait a minute. How'd this get here? And they're going to tell you, you didn't pay it in full. So if you end up financing a smaller purchase, piece of furniture, a computer, whatever, make sure it's paid in full by the time that 0% runs out. All right, last but not least, what's our final piece of advice? This is probably the easiest. You've just got to find somebody to say yes. You can be a co-signer or an authorized user on somebody else's credit card. This really is a great option if you've got somebody in your life, whether it be mom, dad, aunt, uncle, grandma, grandpa, mentor, whoever it is, that has belief in you, that has a little bit of trust in you, that will let you ride on their coattails, so to speak, of their credit. What's going to happen is you are going to become a joint owner or an authorized user of a credit account, either new or that they already have. Now, the nice thing is this is going to allow you to tap into their history. Like I said, you're going to be able to latch onto and ride onto their coattails. Parents out there, if you've got young kids, 16 and up, if you trust them, put them on as an authorized user. My mother did that. Now, she did not tell me she did that, and she also did not give me the credit card. So I had no clue that even happened until I was like 25 years old, and one day she's like, here, this is your credit card just in case of an emergency. And I'm going, what? It's a good option if you've got kids, even if you've got young kids in college. You don't have to tell them that you've done it. You don't have to give them a card so they don't actually spend any money. But it is one way that if you've got good credit, you can let them tack onto your own experience. So be an authorized user or a co-signer on something. And again, that will allow you to attach onto somebody else's good credit. It's going to help you tremendously out there. Last thing, added bonus. If you use Experian, you see some stuff out there for Experian Boost. Typically that will allow things like utility bills, rental payments, all that kind of stuff to report. Now, while it's not always guaranteed and it can sometimes be a detriment because it allows negative things like old cell phone bills maybe you didn't pay to report, it can be beneficial. I know that they charge a fee for it, don't exactly know how much it is, but look into that as an option. So, there are 3 ways that you can use to start building your credit. Actionable item, take a look at where your score is at. See what you need the most. Again, we will delve into credit score basics and all of that in later videos. But really flesh out these 3. Do I want to get a new card? Do I want to take out a loan? Or can I be an authorized user or co-signer on somebody else's credit? Figure out the way that's going to work best for you, and you will see your score hopefully start to improve and build in no time. Hope this video helps. As always, like and subscribe. If you've got something that you want us to talk about here on the channel that is The Former Banker, leave it in the comments below. If this advice was terrible, you hated it, please let me know. You cannot be any harder on me than I have been on myself. I love haters. It lets me know that at least somebody is seeing this out there. As always, guys, I appreciate your time. Thank you so much for tuning in, helping build this channel, build this community, and be part of the Former Banker family. Till I see you next time, have a good one. God bless.